All right, guys. So in today's video, we're going to talk about Starbucks. Should we own this stock long term? I bought it. I have an average cost basis at $84.32. I have about $720 invested. That's 3% of this account. As you can see, I have other things as Tesla, Baba, and FSPGX, but today we're just going to focus on Starbucks. And my buys were high at $90, 91, 87, and then I just bought three more shares at $73.54. But let's take a look. Let's see if we can find, is this a good buy? Are we near support? Let's get into it. So I like to refer to Starbucks first, just looking at the overall. We look at the chart over here. Looking at the chart, as you can see, this stock has sold off. It has sold off massive red from its last earnings report, went from $87 down to about 73. So we did add at the low, but you got to look at the past performance. I mean, it's been declining. It went from 110 down to 73. Is this a buying opportunity? That really is the question. On the 5-year chart, we do have support in the 70 range, which you can see right in here, from $70 up to 73. Right up here, $70 up to 73. So there is support currently, but if that tends to break, that's a problem. But really quickly, just looking at this part really here, we're going to look at the draw. We're going to draw the channel from the low, and this is the trend channel right here. So it is definitely a little off right now, and we have some weakness. Because if this continues to break down to 73, we're in some trouble. But that doesn't mean I'm not going to hold them long term. I'm holding this company long term, but I like to see what the analyst ratings are. Right now, the analyst ratings overall is bearish, 2.5 out of 10. Now, if I'm going to hold a company long term, I'm okay, buying with such weakness showing. But 8 independent firms thinking that this is a guaranteed just sell the stock. I'm going to hold it. It's 3%, not a big deal. But just looking into Starbucks, if you don't know what it is, it's a roaster, marketer, and retail of coffee. And then when you compare it, the competition that it really has is Dutch Bros, Krispy Kreme, and Restaurant Brands. Those are basically your top 3 guys that are competitors of Starbucks. So you definitely want to know what your competition is as you're going into this. But overall, their net profit on sales in 2019 was around 12.7%. Cash flow was 4.26. And when you compare this and start looking, their cash flow is still good, 4.19, 4.88. And then it's left blank for some reason on this. I guess they didn't update it. But their net profit, it's not terrible, 11%, and that's what they're averaging, 12%, 5%, 15%, 10%, 11%. So I'm not too worried when it comes to them as a cash position, but I think the big worry is, where are they going to grow from here? Where are they going to go? So I like this article from Seeking Alpha, and they talk about the Starbucks miss earnings, and they said it missed earnings so badly that it caught them off guard. And then they didn't like what the Starbucks CEO, how he explained why they missed it, besides saying it was just a tough quarter. But there's no way around it, he's saying. This quarter was disappointing. The stock plunged 15% and it trades in the low 70s, which we know. Seeking Alpha does provide a bull case for Starbucks because they think it has strong brand recognition. That's why I own it. And I like the high returns on capital employed. The international store expansion, that's big for me, and that's why I hold them personally. But it's only going to be 3% of the portfolio. It's not going to be any more. So I'm not risking the bank on this. And they're saying that customers load their cards up front, so you can get the collect the stars, the gift cards, etc., until they get their free drink. So I like that brand recognition. I like that they're able to, keep their customers in-house and continue coming back. But they talk about how this quarter was softer than planned than January. And you're looking at the Q2 earnings here, you can see, just looking at the guidance, which was not good, the new store growth is 7% globally. In US, 4%, China, 13%. So that's a market they're starting to get into, which is what I like to see. I want to see them start growing internationally more, and I think it could start bringing up their revenue. And that's their operating margin, is just based on progressive expansion. They're trying to go globally 7 to 10%. So for me, I'm okay with that, but this was not happy when they were looking at this. But this is the problem. They do guidance, and look, global revenue is expected to grow low single digits with no operating margin expansion. That's the big issue. That's why Starbucks is selling off. So I just want to hit the financial highlights from the Starbucks report. We're down 1% when it comes to the operating margin, 8.6 billion. We're down on the non-GAAP earnings per share at negative 7%. But the global store count up 6%. So they are expanding. So it's showing revenues are down 1% year over year to 8.6 billion. Comp sales declined 4% globally. But you got to look at the whole big picture with interest rates, everything being so expensive. Maybe the customer is cutting back a little bit. That doesn't mean that I want to sell right away. I'm going to buy during this time. But they do talk about how Dutch Bros is going to report, and that's going to give you a good comparison of how overall these coffee companies are really doing. If Starbucks is struggling, how are the other growth companies that are selling? So that's what we have to see. We have to be patient and see how they're doing. So when I look at Starbucks and I see that their market cap is 82 billion, their PE is 20, their earnings growth 17%, their gross margin is 26%, I'm okay holding them. I'm still going to get a dividend holding them. I'm holding them long term. Do I like seeing this, how their earnings is decreasing? I mean, no, of course not. I mean, they beat earnings in Q4 of 2023 by 0.09, but they missed the next two, 0.03, 0.11. So yes, it is decreasing, but I like to believe that maybe it's because of what's going on surrounding it, the macro picture. So I'm going to continue to hold them. I'm going to collect my 3.12% dividend, and I'm going to continue to add at these lows, and we'll see how it goes. But they're offering 50 cents, 57 cents per share for a dividend. So let me know if you're holding Starbucks. I'm just curious how many shares, where's your cost basis, what's your thoughts? And, this video is not telling you to buy Starbucks, but I think it's good to bring it up because it's sold off. It's been a company that's been around for a little bit. And it's good to see, what everybody else thinks about it. Because right now people think it's bearish and the sentiment is very bearish. They think short term, midterm, and long term all week on Fidelity. So I'm going long on them. I'm collecting my dividend and I'm calling it a day. All right, guys, this is my channel. If you like the video, please subscribe, share it. Really means a lot. Appreciate it. Just want to show you some of my playlists I have. I have playlists dedicated just to Fidelity and index funds and ETFs, Vanguard, my trading P&L for day trading. If you want to see how I'm day trading, what I use, I explain it on the Fidelity Active Trader Pro. My long-term investments and penny stocks when we're looking to torch. So definitely check it out. Leave a comment, subscribe, and if you find value, just let me know. Thanks.